SoFi had an incredible quarter in the third quarter of 2024, and the stock fell in trading on Tuesday. Stock was down as much as 10%. As I'm recording late in the day, shares are down about 6%. So what in the world is going on? The big picture is that SoFi is growing in all the right places. They're increasing their guidance. They're expecting to be more profitable. But there's a difference between expectations and what analysts were expecting and what the market was expecting. So I want to put this in a little bit of context. I'm going to start with the company's stock chart because when you pull back a little bit, the move today isn't actually that big a deal. But I'll get to that in a second. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. And let's start with the chart from Google Finance. You can see shares down about 6.4% as I'm recording, with about an hour left in trading today. But why is the stock down? A big reason is because over the past month, shares are up 33%. That's even after today's decline. So yes, the company beat expectations, but it clearly didn't beat expectations of the people who were buying the stock in the last couple of weeks, let's say. So this is another one of those cases where I think you need to put the move into context and the results into context. Yes, the stock is down short term, but even just pulling back a little bit, shares are doing extremely well. Pull back even more, 6 months, shares are up almost 50%. So all things considered, if you are a long-term investor like I am, not the end of the world for SoFi. But let's get into these results. I'm gonna start with a couple of things they talk about every quarter. These are just high-level numbers. The number of members up to 9.4 million. That just continues to grow quarter after quarter. What you just wanna see is up and to the right on this member number. Same thing with the product number. And really this product number is just how many loans do they have outstanding, how many credit cards, how many bank accounts, all added together. And you get that to 13.7 million now. What SoFi really wants to do is not only increase their user base, but then increase the number of products that each one of those users is using and interacting with. Galileo accounts, this is their technology segment, and you can see that that is growing, but that growth has slowed down over the past couple of quarters. I think if you're gonna look at anything as a little bit disappointing, it's gonna be the Galileo side of things. And I'll dig into these numbers more, but lending products and financial services continue to grow. Lending actually picked up quite a bit in this third quarter. Financial service just continues to be a juggernaut for SoFi. I think that's really where the long-term growth is going to be for the company. And this is where management is talking about the two growth areas beyond lending. Now, with SoFi, what I think about their lending business as is, yes, it's a good product. They're starting to go a little bit more capital light on lending. But that's kind of like a Trojan horse into the financial services industry. Where you really want to be is in these financial services, so stock trading, margin accounts, IPOs, all that kind of stuff that goes on with brokerages. And then the tech platform, that is the Galileo business. And you really want this business to grow significantly over time. You can see that 64% growth in those two businesses combined. That's on a revenue side. And this is financial services in the tech platform as a percentage of SoFi's business overall. Now 49% of the business. So go back to the end of 2021. This is only about a quarter of the business. Next quarter, it will probably pass half of SoFi's revenue. That's exactly what you want to see, especially when those are now the two highest growing segments in the business. A couple of operating results. Overall revenue, $689 million, up 30%. So you can see revenue is accelerating. That's what you want to see with the company. Yeah, 22% growth last quarter. We're going to pick that up to 30%. Quarterly adjusted EBITDA, that margin is rising as well, now 27%. And this is really the thing I'm watching here. They now have 4 straight quarters of net income, now $214 million in net income over the past 12 months. So is the stock expensive? On a lot of traditional metrics, it looks like it is. It's trading for about 56 times earnings. But just look at these trends. If this trend continues in any way, shape, or form, this is going to look like a pretty cheap stock that's growing at 30%. So I love the trends I'm seeing from SoFi. Then I'm going to show the quarterly guidance, and then also I'll put this in context with the annual numbers. But you can see that their guidance was for $625 million to $645 million in revenue. They crushed that number, $689 million in revenue. Net income expecting 40 to 45 million. That would be basically 4 cents per share. Actually got to 61 million, 5 cents per share. So this earnings beat on an earnings per share basis wasn't just a rounding error. Sometimes that happens when you're in these small numbers. This is actually a pretty solid earnings beat on the bottom line. So again, really good trends, both on the top and bottom line for SoFi. And for the full year, financial services continues to be the growth juggernaut, over 80% growth from 2023. Lending, adjusted net revenue of at least 100% of 2023 levels. Basically, that just means that lending revenue is going to be flat. That's not unexpected for SoFi. It was actually down over the past couple of quarters. They picked that up recently. And tech platform revenue, that's going to be the Galileo business, net revenue growth of low to high teens versus 2023. That's a really low number compared to financial services, but in a traditional financial business, low to high teens growth is a pretty good position to be in. And look at this net income, $204 to $206 million. So expecting to be extremely profitable. And look at the guidance changes. Original guidance, you can see here on the right, this is gray. So I'll read some of these numbers, 7 cents to 8 cents in earnings per share, revenue of 2.37 billion to 2.41 billion. They increased that and then increased it again this quarter, now expecting a little over $2.5 billion in revenue and between 11 and 12 cents per share in earnings per share. So continuing to increase guidance. Management's comments during the conference call were extremely bullish, said, hey, we're in a great position with a steady economy, falling interest rates, and we have tons of demand for our products, and we're increasing those facilities over time. I want to highlight a couple of numbers in these financial segments, and this is on the loan side. This is what these first three lines are. Where things have really picked up in the past couple of quarters is this number right here, personal loan originations. $4.9 billion in personal loan originations in the quarter. That's up from $4.2 billion a quarter ago, $3.3 billion in the first quarter. This is where SoFi has plenty of demand, and what they've said earlier this year is we're a little bit uncertain about what the interest rate environment is going to look like, what the economy is going to look like. So we're not going to give out a ton of these personal loans because they're relatively high risk, relatively high default rate. So we're going to kind of pull back on that business. In the third quarter, they basically opened up the floodgates a little bit. Now, this is also the business that this recent deal with Fortress Investment Group will open up $2 billion agreement. And basically, SoFi becomes the company that attracts the borrowers, facilitates the loan, and then the loan itself goes to Fortress Investment Group. So this is going to increase their facilities and their ability to give out those personal loans, moving the business much more of a fee-based structure. So a higher percentage of revenue and earnings is going to be fee-based instead of taking traditional loan risks. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The other thing I wanted to do is pull back on some of these segment numbers and just show the progress that's being made, particularly on financial services and the technology business. So this is the segment revenue. What you have here in teal is lending revenue. You can see that's a little bit volatile over time. It is growing, so 25% compound annual growth rate since 2021. Technology is dark blue. That is a really high growth rate up until about a year ago. Then things started slowing down. That's what we saw in those Galileo numbers. So management basically said there's a lot of deals in the works, but we haven't seen them come to fruition yet. And then financial services, that is in orange. That's where the growth juggernaut is, 138% compound annual growth rate since 2021. That's the business that's expecting to grow about 80% this year. And the profitability of those businesses, that's what they measure in contribution margin. Again, you see lending relatively flat right now. Financial services is really what is driving bottom line growth, contribution profit growth for SoFi. So as that business gets bigger, expect that to be a bigger and bigger chunk of the company's revenue and operating income. So I think really great trends for SoFi overall. You have to think about this business as a full business, not just one segment, because customers that are going to be coming for one financial services product may also look for lending products. As SoFi builds out the technology to build out its own systems, those are going to be then licensed to other banks and financial institutions. That's what the Galileo products are. So a lot of opportunities for SoFi to grow the business. I think growth is going to continue for the foreseeable future. This is a digital first company in a world that's moving to more digital financial transactions. Just a phenomenal place to be. I'm not real worried about the pullback in the market today. Just take a step back and look at where shares have been over the past 3 or 6 months. That's much more important. What is the long-term trend for the business that will eventually make its way to the stock market? So absolutely not selling my shares of SoFi. If shares continue to pull back, I may actually add to that position. But let me know what you think about the results from SoFi. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.